Hey guys, welcome to Ticks and Measures Scheme, where we try to turn our hindsight into your foresight. Now listen, double hitter coming here today with another video. After not posting in a while, I got a second video out, just like wow. But I could not go without talking about the world of stocks because it's been an interesting time. Man's been making gains. I've got a theory on Tesla. Is it Fury or Fury or Fury? English is not my first language. It actually is. I've got a theory on Tesla stock. I dabbled in a bit of day trading, a couple of stocks here and there, and yeah, I just wanted to talk about some stocks, And so, obviously, first and foremost, yeah, guys. In terms of investing, it's about investing consistently. Now, when you invest consistently, then you get what we call dollar cost average, where basically as the market's going up, you're buying. As the market's going down, you're buying, because most of us here are for long-term investing, which means that within the next 20 years, within the next 10 years, we see our money compound, and the effect of compound interest will help us. So that's the reason why when the market's been going down during this time, we are technically in an economic recession, as well as a pandemic, as well as all the other financial bubbles going on, so things going down. But for you to actually be doing well as an investor, the important thing for you to do is to be clued up in the news. You don't have to have 100 investments. You only need one investment to do well. For example, now I had somebody in my comments chatting like, I'm so happy I did not sell my NIO stock. I'm so happy I did not sell my NIO stock. Well, my thing was, for the UK people, if you had an ISA, you had to sell your NIO stock. But you could still buy NIO in a non-ISA account. And I went back into NIO into a non-ISA account, and wow, gains. And my overall portfolio on my ISA investing account is also doing well, healthily coming back up. So that's been a good thing. NIO has just been shooting up. NIO is one of those companies whereby, for me, that was there when it was what? Let me see, how low was I in? It was like only like £2. Jesus Christ, they've grown, But another company that I dabbled in this month in doing some day trading, me and my friend, was Rolls Royce. They went all the way down, and it was an interesting thing. They got bailed out, and then their stock was going up and down. I think I made at least £100 on them. On a day trading thing. It went up, went down, it was just hovering over 273, 235, whatever. Made that piece, cut, and then they went and issued 60 billion shares? Something like that. They basically went from a factor of 1 to 4, and then went all the way down to now 72p. And did I disappear? Let me see. Am I still in there? This is going to be a very relaxed video, by the way. Put £10 in there. But when it comes to investing in stocks, for most of you who don't want to do the legwork of actually checking in the news, is to pick 2-3 companies which you are going to do enough research, or start investing in what you know. If you don't believe you know enough about any company, then what I just tell people is go and buy some stocks within the FTSE 250, the FTSE 100, and the S&P 500. The reason why I actually like the FTSE 250 over the FTSE 100, because looking over the long-term gains for dividends reinvested, this 250 actually outperforms the 100. So, but I'm invested in both because they both, in different periods of time, they go up, they go down. The S&P 500 obviously tracks the US stock market, and it's a simple way for you to just invest your money and get the overall returns of the stock market. Now, we have election season that just happened. Whenever they figure out who won, will affect the stock market. It's been going up, it's going down. You've missed probably some of the gains, but the important thing about investing is that it's a long-term thing. Because if you just miss the 5 of the best trading days, you've lost so much of the gains. It's not about time in the market, it's just time in the market. So for all the reds I see, the stock market will teach you about patience and will manage your risk tolerance. So it's just about you consistently investing, because look, this is the wealth building thing. Spend less, save more, make more money, invest more, focus on taxes, and then safeguard wealth and your assets. That's it. Spend less because you need to manage your spending, get control of your spending. That's the only way for you to save. Save more there's an extent to which you can actually save. You can't save everything. You need to live a balanced life, so you save. Now, once you see that you can't, once you spend less, you now start saving more. Once you can't save any much more, then you need to find how and to earn more. Go and get a new job. Ask for the promotion, ask for the raise. 9 times out of 10, they're not going to give you the raise or the promotion unless you ask for it. So if you're there waiting for merit, it's not about working hard, it's about working smart, so ask for it. Then, once you've earned more, start investing more. Savings should be split on savings in terms of cash liquidity and in terms of investing in terms of the market, into assets, etc. that will appreciate over time to beat inflation and grow your wealth. Now, once you've invested more, then now you've invested a lot more, then you start thinking about taxes, man. You start thinking about, how do I pay less taxes? And most times to pay less taxes, you have to create more jobs, or you need to do some kind of thing. So it is what it is. And then after that, the most important thing is about securing your wealth, because you can go from rich to broke real quick. It's hard to go from wealthy to you might go from wealthy to rich, but it's all about securing your thing, so that's what it is. Now, when it comes to the stock market, again, when you're picking stocks, I don't really like recommending stocks, but I got a couple of ones that I got my eye on, which I'll do in a later video. But my theory on Tesla stock. Now, when it comes to the stock market, what goes up must come down. And the reason why it's important to look at the news is because when you look at the news, you understand the reason why stocks go up or go down. So investing is partly, financial, economical, strategic, but if investing is also emotional. The reason why the stock market goes up and down is because it's reflective of how investors feel at that time. Now, Tesla stock doesn't make sense. Now, I remember watching during March, seeing like me and my friends were working it out, like, okay, if it's under £900, I will invest or whatever, and I see this thing shoot from 900 to freaking 1,000 to 1.5. I'm just like, surely it has to come down, because Tesla's one of those stocks that has been so volatile. I mean, I think Rolls Royce has taken a picture of their book, but it was so volatile that it was going up and down, going up and down, going up and down. And so the reason why Tesla stock was shooting up, if you did your research, was because of one, they posted a profit for one of their quarters, for 2 quarters in a row. And so it meant that they may be reviewed to be joining the S&P 500. And then the second thing that meant that people were rushing to them, which inflated the price, was that they were going to have a stock split, which meant that their stock was going to split from a factor of 1 to 5. So now people are emotional, so when they go into it, they think, okay, if it's going to go into S&P 500, if it's going to go into join this index, it's waiting, it's going to do whatever, it's going to go up. Now, Tesla as a company on a fiscal year is not profitable, but in most years, within a quarter, they have posted a profit. Now, averaged out for their financial year, they haven't posted a profit. Now, for you to join the S&P 500, you need to have X amount of capital, etc., and you also need to have profit being posted for 2 months, 2 quarters consistently. Now, you'd think Tesla, they didn't get joined into, because that was the initial shock. They didn't join the S&P 500. They didn't get the review. They didn't get the food. So you think the market is going to correct all this inflation of all this, everybody loving Tesla, all my days, that now they didn't get the S&P 500. You'd think that, okay, cool, they're not going to, their stock price should come down. No. So what my theory is, I think their stock split saved their stock price. I think them splitting their stocks saved their share price, because now psychologically, if you look at it on an emotional thing, when I'm looking at it like now where it's 429 for a Tesla stock, it seems reasonable. 429 for a Tesla stock, that seems reasonable. That doesn't seem too much. But if you times that by 5, that means this should have been 2,000, maths, 2,150, something like that, dollars. Yeah, that's a bit overvalued for a company that hasn't, posted a profit for a year. So I think my theory on Tesla is that their stock split saved their stock price. Because if not, I feel like because they knew it. Once they went out to 2,000, even Elon Musk in various previous iterations has come out on Twitter and been like, our stock is overvalued, the Tesla stock is overvalued. And at that point in time, it was only hitting 800, 700. He was saying it was overvalued. He knows it's overvalued right now, but he's like, you know what? let me shut up, let me not tweet, let me cash in on the thing. And yeah, I think that's how Tesla's saved their stock price, by doing a stock split. Because if you understand, stock splits don't intrinsically increase the value of a company. But if you saw what happened to Apple when they announced their stock split, it meant that everybody was rushing to them, because they were like, oh yeah, when psychologically that's the reason why people do stock splits, because Apple is a company that likes to keep their stock price under £100, because it keeps everybody coming in, and it keeps people interested in buying their stock. I say £100, $100, because if you look at it, you feel that it is more palatable to buy it at 100 as opposed to buy it at 400. The good thing with Apple is that they have a track record that every time they've split their stock over another 10-year period, they've always had their stock has always tripled. So yeah, as a company, they keep on increasing, but how long would they increase for? Ooh, Apple is here. They might seem indestructible, but that one's for another video, because we really had Nokia here. We really had blockbusters. It only takes one. We had Dell. We had all of that. So that is my little babble about the world of stocks. And yeah, am I going to be investing? I've been investing consistently. But for those who've just started off, take a little bit of money, throw it into an index. iShares have some good index. Trading, what's it called? Vanguard. And yeah, I think very soon we'll do some stocks to start in as a beginner one, depending on your strategy, whether it's dividends, growth, etc. But in the meantime, guys, have a lovely day.